Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis. If you're new, welcome, and if you're returning, welcome back. And just to let you know that the Forex pairs are time stamped, and I've also included the charts that I'm going to be analyzing in the video as links as well. And just to make you aware that I am a fundamental trader and sentiment trader first, so I normally start the week with understanding what the important news and data is going to be, and that is really what moves the markets as far as you know, data, macroeconomics, and risk sentiment. And if you want to also learn about fundamental analysis, I have a free fundamental analysis and sentiment course, right? Link is in the description box below, and it'll give you pretty much the overall well, the way that I approach the markets when it comes to fundamentals and all the things that I consider and think about. And then what I'll do is that allows me to then obviously create this fundamental analysis spreadsheet. If you click on that, and if you do your fundamental analysis, then I can determine which pair I want to be buying and selling based off of, you know, dollar bullishness, you know, yen bearishness, etc. Right? This only includes fundamental analysis and not risk on and risk off analysis. Right? So if you get risk on, which is basically where investors are in a trading environment where they are willing to take more risk and get bigger return, than the commodity currencies like the Australian dollar, New Zealand dollar, and the Canadian dollar tend to do well in that environment. Risk off is basically when there is a bit of turmoil, uncertainty in the market, and traders are investors are putting their money, taking their money into safe haven assets. The Japanese yen and the Swiss franc tend to benefit from risk off environments. But this chart is strictly fundamental analysis. So after you've watched the course, take a look at this, and you can see why I am, you know, bullish, bearish, or, you know, tend to be different degrees of neutral and bearish within you know, the currency pairs. Anyways, let's get on to the technical analysis, right? And we start off, as we always do, on the Dow Jones Dollar Index, which is a measure of dollar strength. Now, we don't necessarily trade the dollar index. We just look to see where, from a technical perspective, you know, where we are when it comes to supply or demand, which are areas of value, by the way, or potential areas of value as they were in the past. And if you're new to supply and demand, I have a free beginner's guide to supply and demand. Again, link is in the description box below. So you can see from last week, and in fact, I'll go to the chart that was posted last week. So this was last week's analysis. Press play. And we did again react off of this demand zone here, right? And then, you know, we went a bit higher, obviously, into this supply zone. Now, again, understanding fundamentals and sentiment, not every demand zone and supply zone should be traded. You have to kind of decide where the strength is going to come in from a fundamental perspective, right? Fundamental analysis, and then do your technical analysis. So if I'm bullish on the dollar, which I am, all I'm looking for is demand zones. If you're bearish, obviously, if you think the dollar's going to get weaker, then you look for supply zones, right? So those of you who've been following me for pretty much the whole year, last year as well, you'll know that I've been always bullish on the dollar. So I was really just looking at, you know, a reaction from this area right here, and we got it. So that meant that there was buying opportunities on other dollar pairs. Now, if you do want to be a buyer of the dollar, then you'd be looking for demand zones in the dollar yen, dollar Swiss, dollar CAD, etc. Right? If you're looking to be a seller, we are actually up into this supply zone right here. So you'd be looking for some you know, supply price action within that zone to confirm that you want to be short, and then you go to obviously the dollar pairs and look for any, you know, if prices any supply zones, and then you look for shorting opportunities, right? So We are up into the supply zone. If you head down back into this demand zone again, right, again you could look for buying opportunities on other forex pairs, and again those are your options right here. So now let's move on to the dollar yen. And dollar yen from last week, let me just zoom in a little bit. Last week's analysis, right, we've actually, again, you can see obviously the bullishness of the dollar index and the fact that we're probably more in a risk on environment. There's been China talks and a possible agreement between tariffs between China and the US dollar, which is pretty good for both parties, good for the dollar. So you've had some last week you've had some dollar strength, and again that's created some demand within this area. So if we go to the dollar yen, we could now create a demand zone, and I was saying this last week that what you want to see is higher highs, higher lows, right, within that area for a before looking at any kind of buying opportunity. So you've got this price action movement right here. Let me just move that to that down there, right? So now if we want to be a buyer of the dollar, what you're looking for is a pullback into this demand zone right here. If you're looking for a sell trade, right, you'd be looking for prices to come up into this supply zone before looking at a short trade, and also apply the supply and demand equation. So what we use, this is basically understanding where forced and willing supply and demand orders are going to be coming into the market. And again, there's a video in the description box below which explains everything. So I use horizontal, diagonal and dynamic support and resistance within areas of supply and demand to understand technically where there should be more supply or more demand orders, right? Why are traders going to be forced to exit their position, take profit, etc., right? So why is there going to be more supply in this area from a technical analysis perspective, and why is there going to be more demand than supply in this area here, right? And again, the video is in the description box below. So if we just zoom out a little bit, we can see that there is horizontal support and resistance. You've got support, support, support there, bit of support here, right? So the underside, and I would say the underside of this supply zone, right, is where you're probably going to get traders, right, who from a value perspective, right, who think that the Japanese yen is potentially going to get, you know, expensive, well, is a bargain area here, and the dollar is expensive, right, and they're going to be shorting here. And there's also going to be traders who trade technically support and resistance here, looking to either take profit if you bought down here or enter new trades from a support and resistance perspective, because this is where other traders are going to be looking at getting in what short support and resistance traders, right, within this area of supply, right? So if you're looking to buy Japanese yen, this is going to be a first area. If you're looking to buy the dollar, you can actually see that there is, from a daily perspective, I would say probably from here to around, if you want to cover that area there, maybe move down a bit, yeah. So within this demand zone, right, you've got support, resistance, resistance, support in this area of demand as confluence, right? So if prices do come back down here, again, traders are going to be looking at that area, right, from a technical analysis perspective. That's going to be support. We know it's an area of value because it's demand. There was proven demand here. Prices went higher, so there's proven demand. And there should be, again, from a fundamental perspective, if risk is on, then we should be buying the dollar according to my fundamental analysis spreadsheet. So those are your options on the dollar yen. Let's move on to the dollar Swiss. Now, dollar Swiss, last time we had the charts, what's happened is we've created higher highs, higher lows from this area, right? Again, which I was saying I was looking for. So again, we've had risk on coming to the market, positive sentiment. The Swiss franc doesn't benefit from that type of environment. So if you were looking to get short anywhere within this supply zone, it wouldn't have been the best decision really to make. So what we're looking at now, if we go to the charts, from an update perspective, I'm going to get rid of this, get rid of that, and get rid of these areas here. Right, in fact, I'm going to get rid of there. So we've got we've just touched the bottom of this supply zone, right? So what I'm looking for is probably, if I was looking to short this, looking for anywhere around this round number parity 1.0 to probably look to get short if I was looking to get short, but I'm not looking to get long. So now we've created some demand zones. So you've got demand there and you've got demand there, higher highs and higher lows are proven demand areas. And if we were to look for some confluence, we would also have this area here as a level of support. You can see it was support, bit of support, and again support there. So if prices come back here, then again we look for, we understand forced and willing supply and demand. If you sold here, where are you going to take profit? Trouble area here. If you sell here, you got to buy to exit. If as supply and demand traders, we're looking to buy here, and it's going to be new traders looking to also buy here who have got their eye on this support, you know, support and resistance zone here. So net there should be more demand orders within this area, right, from a technical perspective. And again, we apply our fundamentals and sentiment before we get in, right? And this represents a potential area of value from a demand perspective. So do we have anything else probably will support that? I think we do. Let's go to diagonal. Support, I think, within this area. Yep. So all comes down. Let's see where dynamic support and resistance is. Dynamic is just the 100 and the 200 MAs and the 21 and the 50. So at the moment 100 and 200s are not within this zone. If you don't get it, it's not the end of the world. It's just again a bit of confluence, and the 50 and the 21 is around there as well. But I'll be looking for prices to come back down into this zone before looking at a long trade. I think this is a very good area. I'd like to get involved, or look to get involved in buying the dollar Swiss, providing everything is obviously, you know, risk on and the dollar's doing well. So moving on to the dollar CAD, and dollar CAD from last week. Press play. Right, so this demand zone has held up. Oil has been rising as well, and from a fundamental perspective, I think there was decent news on Canadian inflation. So you've got two, you know, potentially decent currencies against each other. It's still the dollar's pretty the stronger of the two, but I would say with oil, you know, rising and inflation rising for the Canadian dollar, you're probably going to see potentially some maybe more of a ranging market state on this pair, as the Canadian dollar and the US dollar are probably quite decent at the moment. So let's go to the charts, see what we got on the dollar CAD. So again, this level of demand is holding. So what you'd be probably looking to do is, if prices either pull back to this zone here, look for some bullish price action. If prices do create a new high, and in fact, I'm going to delete this, and this is what I would call hidden demand right here. And you can understand why I call that hidden demand. Again, the link is in the description box below. If you look at the guide on how to draw supply and demand using candlestick zones, and you'll understand exactly why that is hidden demand. And technically, we do have a level, another level of demand right here, right? Because we've made higher highs and higher lows, like that. Got pullback, and then we made that right there. So if you were trading this, for example, on the lower time frame chart, you'd be looking for prices to probably come back down. In fact, it's touched a few times, so I wouldn't necessarily even look at this zone. I'd probably look for zone further down, right around here. If prices do come back down here, and you trade, you know, the lower time frames, intraday time frame charts, then this represents probably the better opportunity. And again, I trade the 4 hour and higher, so I'll be waiting for 4 hour demand to come in here if I was looking to be a buyer of this currency pair. If we're looking to be sellers at the moment, we haven't got any supply until further up here, or we create supply around here. So we haven't got anything right now immediate from a supply perspective, so I'll leave that at that. Now moving forward to the New Zealand dollar, US dollar, and made a bit of a mistake. For some reason I put dollar yen supply and demand, but this is actually the New Zealand dollar. And what we've had last week is a sell-off at this zone, and I'm actually in this trade. I've got short on the dollar, New Zealand dollar, US dollar, and I'll show you exactly why I got into this trade. But we've taken out this area of demand here, and we are finding ourselves around this area here. So if you did manage to get short with me, you know, well done. You should have taken your one-to-one profit and let the second trade now potentially run down to either fair value, or, you know, the lows of here, or even the lows of around here, right? So we'll go into the analysis, and I think I will be targeting either here or probably this demand zone here as a take profit if it can get down there. Let me just delete there, and I will delete that one there as well. So the entry was on, I think it was the 4 or the 6 hour. No, it was the 4 hour, and it was actually on this candlestick right here. Right, nice outside candlestick, closed at 10 o'clock PM GMT, and we were up into this area of supply, and then zooming down, you can see on an intraday time frame that we had support and resistance, right? So you can see that was the daily one, but then you had support, past support, right? Support there around this 0.685 level, and then we ended up coming up again into that zone there, right? Putting in a nice traders would have been probably faked out, breakout traders would have been faked out on that candle there, and then we got this sharp move down supply. So this was a brilliant candle to get involved in. One-to-one's been reached. Now we're just waiting for the, you know, second target, running down to either 50% of this range. So if this was the range, sorry about that noise, that's an app that I've got to remind me to drink some water, if you did hear that, by the way. So second targets will either be here, but I think it's it's probably going to end up coming down to somewhere around here, the 66 to 66.0 level. So I'm going to be holding, and this is a nice risk reward, probably around around the 6-to-1 trade on the second position. So now, because I've taken profit on the first position, this is basically what you would call, traders call a risk-free trade. All right. So just to show you that, if you're trading lower time frames, you use the daily supply and demand zones, and then look for entries within this other supporting evidence within the daily supply and demand zones, because I do get a lot of traders asking me if you can use supply and demand zones in the lower time frame, and you can, but just in this way you want to use the higher time frame charts, right? The higher time frame supply and demand, and then look for entries on the lower time frame, right? So that's the analysis. But if you are looking to get long right now, here's an opportunity, as you've got some support, bit of support with resistance here, support there. So if you are looking to get long on this currency pair, that's where you'd be looking to buy. If you're looking to get short again, if prices do come back up to here, this would be where you will want to get short, right here. And again, your next level to probably get long is somewhere probably around there as well. And you've also got this diagonal support area within this quite large demand zone. Looking at now the pound dollar, and the pound dollar is another trade that I got into. Took 2 trades this week, and prices ended up coming up and then selling off, right? So they didn't respect this supply zone. Actually, matter of fact, it did, and I didn't get into this trade, which I really wanted to, but I would have broke even on this trade anyway, because that was the vote regarding Theresa May's bill on Brexit, and there was a sell-off. And then in typical market fashion, if everyone's short on the market, then you're going to see, the other side probably come in and stop hunt everybody, right, before probably ended up going lower. So there was a lot of traders. In fact, I'll explain what I mean. There would have been a lot of traders, and I was looking to really get in. It was on the 6 hour, right? This would have been my entry. I'll show you. This would have been the entry. The problem was, it wasn't any fault due to mine. It was actually my broker. They were going through some sort of maintenance issue right at the time, yeah, which was quite frustrating. But like I said, it kept me out of the trade. This would have been my entry, 2 candle swing, and I would have reached my 1-to-1 on first profit, but then I probably would have stopped out on the second one, right? Which is basically what happened. Now, if you are a trader and you try to get in short in any of the lower time frames, and imagine this in real time. So this is all we saw. Yeah, prices were selling off in the lead up to the decision on the MP's votes, and then as the MP's vote actually came out, right, and even though it was as expected, prices did what they were doing. And the reason why is because the markets are really a zero-sum game. If you haven't got, banks need liquidity to push the market lower, and if everyone's selling, yeah, then the liquidity is really to the upside, right? You need sell orders. You need banks need sell orders, right? They need for basically liquidity, right? And there was really no liquidity down here, so all the liquidity was above, right? All the stop losses from other traders were all stacked and piled up here as everyone was getting short, and then the market went the other way, right? And even if you didn't take profit around here and you thought that the market was gonna still reverse because of the decision. Where are you putting your stop losses? Anywhere around these structures, around here, and even above the market structure, there would have been a lot of stop losses. And if you sell, right, if you went short, then these are buy orders, demand. And the market is going to do what it does. And as the market started to come back down, I saw an opportunity, not on the hour, but it was on the 4-hour time frame chart. Again, my entry 2 candle swing right there. Right, come up into this demand zone, sorry, the supply zone, around this 1.3 round number, you know, pretty much just touched it. So my stop was above that, because you've got to think to yourself, not just from a technical analysis perspective, but why would you be buying the pound, right? And you've got so much uncertainty around the pound. I'm going to be buying the dollar regardless. So this price action didn't scare me. In fact, I assumed that this was going to be a stop hunt because of what was happening in the market, and I always want to be a buyer of the dollar. So when I saw my opportunity to get short, this is what it was. I've made my 1-to-1, so this is now a free trade, right? So my second position now, I can potentially run down to the lows here, or at least fair value represents a good 3, but 3-4-to-1. But I'm looking probably around these lows, or actually, yeah, it would be, you know, the market low where you've got here, and I'll probably be running it down to this low here, because again, in the lead up to a no deal Brexit, yeah, or a bad deal Brexit, there's going to be a lot of uncertainty, you know, with regarding the pound, unless obviously a deal is to be made, which I doubt. So if you are looking to get short, you may want to either get short on a daily or wait for maybe some sort of pullback on a lower time frame. And zoom down on a lower time frame chart and look to get short. In fact, what does that look like? What would that look like? I would say the underside of this level here, right? You've got a bit of a level there where you've got what traders would call resistance in this 4-hour candle. And in fact, I'll zoom down onto the hourly. You can see it a bit clearer, where you've got resistance, bit of resistance there. Traders would have been looking at that area as support, bit of bullish price action, prices would have continued, and then you've got a breakdown. So if you are looking at potentially buying, then that would be the area. All right, let's get rid of this. All right, so it's not within a supply zone, not just yet, but that's just from a support and resistance, you know, from a support and resistance perspective. But if I was going to be a buyer of the dollar, then I'd have to wait for prices to come up to here before looking at getting short. Or what you want to do is wait for prices to create lower highs, lower lows before looking to get short, because that's where you'd be looking at lower highs, lower lows. All right, so if you're just trading support and resistance, which I don't necessarily recommend, then you'd be looking at the lower time frame chart and trying to get in there. But I recommend obviously getting in from a supply perspective, prices here, or if you know prices do create a lower high, lower low. If you are looking and brave enough to buy the pound at the moment, then again your entries would be somewhere, you know, around these areas here, and look for buy trades. So moving on to the pound yen, and what did we have last week? Again, prices didn't necessarily respect this supply zone. Traders didn't see this as a bargain, but we did create some more demand within this area. But with again risk being potentially off for the pound, what you probably want to do is look for, let's draw some demand zones before we look at supply. So you've got a bit of demand there, demand, get rid of this supply zone, and if you're looking at buying, then you'd be looking at, yeah, probably this demand zone here. Let me just get rid of that little minor one right there. Anywhere around here or down here. If you're looking to be a seller, then you'd either be waiting for price to come up into here before selling, or you'd be waiting for prices to do something like this, where you've got a move lower, a pullback like that, then a lower low, and then you're waiting for a pullback into that lower low area before looking to get short, as that would have been the next area of created supply. So moving on to the euro dollar. And last time we had the euro dollar, we did come up into this zone, and we've continued again going lower. So let's look at the euro dollar, and I think the next area for a shorting opportunity, in case you missed the move, is going to be right there. It's going to be right here. We can basically move this probably around, yeah, that'd be all right. So that'd be where you'd be looking to try and get short. If you're looking for a long trade, you're probably looking for price to come down slightly to maybe the 1.13 area. That'd be where a lot of traders, I think, will be taking profit just before there. So if they're taking profit, new traders are looking at buying this area. There should be a bit of demand here, but again, fundamentals overall, technicals. So I can't see, you know, Europe strengthening anytime soon, even though, you know, prices can do what they want. But from a fundamental perspective, the dollar is much stronger than Europe, with a lot of uncertainty going on, especially around Brexit. You've got the French yellow jackets, the Italian, you know, budget is still lingering in the background. So there's a lot of turmoil in Europe, and also I think it's there's some sort of potential banking crisis. I think Deutsche Bank has been mentioned a few times in some articles. So potentially there's a lot more uncertainty going on for the euro at this point in time. So if you are looking to buy the euro, just keep that in mind. So though theirs would be pretty much your options, and then you've got obviously the lower end of this demand zone if you were looking to be a buyer. So I'm looking for prices to potentially retrace to around this supply zone. In fact, we do have hidden supply here as well on top of that demand zone. So if prices do come back up down, if they fall further and then come up to here, then I'll be looking at establishing potentially shorts around here if I get, obviously, you know, price action and it's worth the risk reward. Yeah, those are the options for this week. Moving on to the euro yen. Let's zoom in a little bit. So last week there really wasn't much opportunity, or any opportunity, matter of fact, on the euro yen. There's still really nothing, to be fair. There's no strong levels of supply and demand. Yes, there is, you know, supply and there's a bit of demand, but we wait for higher lows and higher highs, or lower highs and lower lows, to determine the strongest areas of supply and demand. And really the market isn't showing any of that at the moment. So looking at the euro yen, nah, there's nothing's really changed from last week. So pretty much I'm gonna move past this this trade, this currency pair, and onto the Aussie dollar. Now Aussie dollar, there was a trading opportunity from last week, so we did come up into this area of supply where you've got support, bit of support here, support, turn into a bit of support and resistance. We had supply here, and then we had prices pretty much selling off into this demand zone. So a bit of a tight range, but I think this should probably want to fall a bit further, especially Sunday night. I think Chinese GDP, if I'm not mistaken. Yeah, so China fourth quarter GDP growth is being looked at, right? So if China start to GDP growth isn't great on China, that directly affects the Australian dollar and the Australian economy, as China is Australia's biggest trade partner. So if you get a disappointing figure coming out in a few hours, maybe about 7-8 hours by the time you see this video, then you're probably going to see a sell-off on the Australian dollar, right? Meaning that this demand zone is going to be null and void. But if you were looking to buy the Australian dollar against the US dollar, I wouldn't necessarily advise it, but I'm not offering financial advice. But if you're looking from a technical perspective, then this is going to be the first area. This is going to be the second area, right, that you'll be looking for buying opportunities. If you're looking to be a seller, then if you missed the opportunity this week on the lower time frame, which there was, you know, a bit of a double top, nice outside candle there as well, right? I'd be very cautious about taking a short trade into this zone again, because it's touched quite a few times this level. I'd probably waiting for some sort of stop hunt before looking at getting short on this currency pair. So yeah, because the more times the level is touched, is the weaker it becomes. So I'm not a fan of you know, levels touching, you know, more than twice, 3 times, unless I really believe that this currency is a very weak currency, and you know, I'm trading, buying a very strong currency. So if prices do come back up here, just be wary, you know, that we have touched the level a few times. So what you want to do is, if you really want to get in short, just reduce your position size to maybe half, rather than the full amount or a quarter. Or what you can do is just wait for a potential kind of stop hunt setup, right, where prices get manipulated at that level, drawing traders in, and then, you know, selling off to the downside. And then we have got our last pair, which is the Aussie yen. And Aussie yen, we've come up into this supply zone. We had some diagonal resistance here with horizontal resistance. We did get a bit of a sell-off, right? So maybe if you were on a lower time frame, like the 15 half-an-hour trade time frame, you would have got an opportunity to get short within that zone there. But we're creating higher highs. So let's go to dollar yen, and let's go to the daily. So the supply zone at the moment is still holding. Yeah, I think we still got a potential shorting opportunity right now, and there's your buying opportunity. But one of these is definitely gonna break, either going to break to the upside, or it's probably going to end up coming down and maybe break into the downside. Again, this currency pair is a risk sentiment pair, so if there's risk off, then the Japanese yen will be a beneficiary of that as a safe haven asset. Risk on, the Australian dollar. And again, just keep an eye on China and the data that comes out of China, and really just the risk sentiment in the market in general, right, in order to really trade this currency pair. So if we get any moves higher, then that'll create decent demand, and then we obviously get rid of this supply zone, we make a new demand zone, right, and then this will be your second area to look to get short. If you're looking to get, obviously, say obviously, but you could get obviously the move down, move lower, lower highs and lower lows, and then that would create a supply zone. So then you can try and get short that way. From a demand zone perspective, again, we've only got that demand there, and then we've got these demand zones. So that brings us to the end of this week's analysis. Yeah, so if you do have any comments, just leave them in the description box below, or email me at info@trading180.com. So I hope you have a great trading week, and take care.